Hello, Brian Linchey here with your quick mortgage and housing market update. If you're thinking about buying a home, refinancing, or just keeping an eye on the housing market, today's news is pretty important. Oil prices just shot up more than 5% in a single morning after Iran halted negotiations with the U.S. amid escalating conflict with Israel. That spike in oil is helping push Treasury yields higher. The 10-year yield is now back above 4.50%. And as most of you know, when the 10-year yield rises, mortgage rates usually follow. The mortgage bond market, which directly controls the mortgage rates you and I actually get, has broken through important support levels. This is a negative signal for rates. Analysts say these bonds have room to drop further, which would push mortgage rates even higher. The charts are also forming patterns that often point to rising yields ahead. Bottom line, the technical signals right now are not favorable and strongly suggest higher mortgage rates are coming in the near term. On top of the rate pressure, consumers are feeling squeezed. Credit card delinquencies are at 13.1%, the highest since 2011. Student loan delinquencies are up. Auto loan delinquencies just hit record levels, and the personal savings rate has dropped to 2.6%, the lowest since 2008. When families are struggling to keep up with existing bills, it makes it even harder to afford higher mortgage payments. The U.S. economy is already showing signs of slowing, with first quarter GDP growth down to just 1.6%. That combination of higher rates and weaker consumer health could put more pressure on the housing market in the coming months. Now, things can shift quickly. Any positive headline about a ceasefire or renewed negotiations could ease some of this pressure. But right now, the charts and the news are telling us to stay cautious. If you're in the market, this might be a good time to talk to your lender, lock in a rate if it makes sense for your situation, or at least have a plan in place. Higher rates for longer could mean higher monthly payments and potentially slower home price growth in some areas. Thanks for watching. Drop a comment and let me know if you're buying, selling, or refinancing right now, and hit that like button if you found this helpful. I'll see you in the next update.